Hello, gamers and dragons. This is Stardust, and I have with me today Moey again. And today we are going to be looking at the London Open at 2 a.m. And this is September 2nd. Right now, I'm going to have Moey, who has been watching my videos. We are going to be focusing on the 920 MA cloud. What is the significance of the white 50 moving average?
You do not buy when it's below that.
You don't buy when price is below this. My rule is I would not buy this because it is below the 50 moving average. And what is the rule for if price is above?
You can buy. You buy long.
You can buy when it's above. And what about a red candle? Would you sell when it's above the 50?
No.
No, only take longs or green candles and buy above the 50, and you only take shorts or red candles when it's below 50. So would this candle be one that would be good to take a sell on this red?
Yes.
Yes. And would this green candle at this green crossover be good to take the green candle?
No.
No, because it's below the 50. The indicator is a MA cross builder. I call it a MA cloud. And we have the 9 EMA and the 20 EMA. The side that's closest to the candle activity is the 9, and the one that's farther away is the 20. We are now on a replay of September 2nd. And it is 2:04 a.m. and we're going to go ahead and press play. Price is going up green. And tell me, where would you set your profit target for above the current candles?
I would go at the highest mark, which is, yes.
Okay. So let's put it kind of between these two.
Yep.
Okay. And where would you set the
next one down over by the replay? There's another one. I would mark that one.
This one?
Yes.
Okay, we'll put it just below there. Okay, and where would you put the sell?
The furthest one over.
Okay, we can.
Yeah, there's a very long one. I would put one there at that very long one.
Okay.
And then if you go up and over, yep, no. Right down.
Here?
Yes.
Okay. And so let's look at the price we have on those. So if we entered around here and went up, that gives us 870, 1,320. That gives us 710, 1,400. Okay, so let's take a look here and see if we have any other significant marks. And we have, something going on here, so we might as well mark it. So those are areas that we want to see if price will go there, and it might go beyond. So right now we're going to select for our ATM strategy. We have a $500 stop loss and a $2,000 profit target. So we can adjust that stop loss after we're in the trade based on what the screen looks like. But our profit target, we'll just leave it $2,000 for now, and we can adjust it and be aware that these are going to be points that could have some reversals, and just be aware of that. It's 2:06 a.m. I'm going to go ahead and close this chart back up and put it like this. Now, if we measure the height of our current candle here, that's about, that's close to $1,000 that it's been going up and down throughout the evening. But at the London Open, we would expect more activity coming up. So we're just going to wait and see what happens. And this will show you what time it actually is. The London Open is at 2 a.m. Central Time, 3 a.m. Eastern. On my charts, I keep an eye on the 15-minute chart. I want to see whether price is inside the cloud or outside of the cloud. I don't like to trade when price is inside of the cloud. This is the 15-minute Heikinashi, which the Heikinashi candles smooth over the last period and help you to feel confident to stay in the trade or get out of a trade. This is the 5-minute Heikinashi. So it is now 2:10 a.m. and this red candle has now gone below and closed below the 50 MA. So we're only going to be looking for shorts now. The cloud is still green, but the edges are red and descending. We're looking at this 15-minute candle now. Moey, would you get in on this candle?
I was going to say at the end of this candle, I would jump in.
Okay, we'll take a look at that. See what
So
happens
you
at the
always
end of
wait
this
to wait
candle.
until the second candle. I'm guessing we should jump in.
What was it I told you last time? Don't jump in at the top of a candle, or don't jump in on a candle that's already mostly formed. So we're sitting at 2:11 a.m. This candle started at 2:10. I mean, if you want me to get in now, I will. You want me to get in now?
No, I'll wait. I'll try and be patient.
Another thing we need to look at is, I mean, sure, this is a big fat candle compared to the previous ones, but we kind of, we might have should have gotten in on this one, except that the cloud was still green and hadn't done a crossover yet, and it could have just bounced right back to the other side. Now we have the crossover signal. But again, we're at the bottom of the candle. We want to get in on candles when they're closer to the cloud. So this time, when you tell me to get in, I will get in without stopping you or asking any questions. You just tell me when to get in, okay?
Okay.
Now, a lot of times after a crossover, you will see sideways action. I know some YouTubers will say to go ahead and as soon as you hit a crossover, get into the trade. But I believe that you should wait until price goes back to the cloud closer and then continues down, because price will most always go back to the cloud and then back down, back to the cloud, and back down periodically throughout your trading. This would here be a breakout of the swing level where you see the dots. But even on a swing level, you want to wait for it to close to confirm that, yes, this is continuing. Okay, so that candle started out green. Tell me when you want me to enter, or if you want me to enter.
Well, we're not back up to the cloud yet.
Correct. You definitely want to wait after a breakout to see if price is going to go back to. It's a breakout and a retest, and then we're looking for a continuation. This is a 2-minute candles, which shows what has been happening in the last 2 minutes, as opposed to this candle, which is what has been happening in the last 5 minutes. This one now is turning red on the 2-minute. It's turning red on the 5-minute, but the candle isn't done forming. 2:16 a.m. Central Time.
The cloud seems very skinny, however.
It's descending nicely, but it is skinny. Now, this isn't a bad cloud shape to be entering on. I would feel more comfortable if a candle were here at this horizontal swing level. That would be a good spot to get in. Also, if price goes back up and touches the cloud and then back down again, that's always a good time to enter as well. So the cloud would have to descend a bit more to get where the price is going to tap it at the swing level. Now, of course, you could have gotten in on this if you're a more daring person. And I don't want to say that my way is the highway, because some people are more daring than others and they're willing to take the risk of a loss more. And so you can decide to be someone who says, oh, as soon as I hit a crossover, let's get in. But let's look at this one. If you had hit this crossover, one, it's below the 50 MA, but maybe that's not your rule. You're just on a bare naked chart and all you're doing is let's enter on a crossover. So you go up here, you're going to get $400 or $40 on MNQ. You're maybe good with that and you're done for the day. But then it immediately went back down again. So let's look at some others over here. You have a crossover here and it goes down 2 candles and then it's sideways. You have a crossover here. It's below the 50 MA and it pretty much goes sideways and up 1 candle. So the people who say to trade on every crossover, you just have to be careful. If a crossover is a good crossover, that's one thing, but if it's not, just be careful. The way I trade requires a lot more than just a crossover to get into the trade. That candle had turned red, floundered around down there, and turned green again. So if we had entered on that, we would be sitting around our entry point, depending if we had entered right here, and been, oh no. So that's why I like to wait for price to go back to the cloud and then enter again. Here we have another one. I do have my chart set up with a margin of 35. I don't like it sitting right on the edge. And then when I'm in a trade, I like to pull it out because if I'm marking trend lines, I want to be able to mark it beyond where the cloud is. So we're going to go ahead and mark this trend line. Right now, the top of the candle, and I do include wicks, puts us right about here. Now during this video, I will be cutting portions of the video so you don't have to sit and wait because these are 5-minute candles.
So can you explain what the absolute purpose of the trend line is?
These mini trend lines that I mark, okay,
Yes.
What that does is it shows the trend of the candles that are going. So say for instance that I marked this trend line here. And I marked this all the way down to here based on these 3 candles. So if only these 3 candles were what formed, I could drag this out and say, okay, as long as price stays, assume these candles hadn't even formed yet. As long as price stays within this trend line, I'm comfortable staying in the trade. Even if price reverses back up to this trend line, I'm comfortable staying in the trade because price is still following that trend. Okay, then as you go, you kind of remark. So the top of this candle, this wick, is the highest point. So I kind of readjust my trend line and I'm like, okay, I feel safe staying in this trade. You know, you follow the trend line. You can re-enter when price taps up to a trend line as well. It kind of gives you another area of confirmation and confluence that it's okay to stay in this trade, that even though this candle is green, it's still below this trend line and I feel good about it.
Thank you.
Now, a lot of people will get into a trade when it gets back close to the cloud.
It would be nice if this goes back and taps close to the cloud so we could jump in.
When this cloud is at this swing level and price taps back to that, that is what I consider the equivalent of a cloud tap and a breakout. And so that's kind of my ideal spot to be entering a trade, is when both of those things are happening at the same time. It's more confirmation. Now, somebody who does the cloud crossover, this candle did not show a crossover until midway in the cloud. And if you had entered there, you would have been right about here and sitting at $790 or $79. Say your goal was 1,000, it wouldn't have hit the 1,000 yet, and it would have reversed back up to 130, back down to 775, back up to 275. But you know, you could have closed it before you hit your 1,000. And so you just kind of need to decide, am I going to wait for a perfect A+ entry, or am I going to just go ahead and take some little ones? So yeah, you could have hit a $500 trade before it reversed back from this spot, or a $50 trade on M&Q. It just depends on how daring you want to be or how safe you want to be. This is what we want to see. We want to see that candle go back and tap that cloud at this point here. So if it were to close at this point and the next candle's red, that's where I would be looking at entering.
Yes.
On our 2-minute chart, we're showing that price is going up. We've had 3 green candles. The bottom of the red cloud has turned green. The cloud is no longer descending. It's flat. Same here. The cloud has gone flat. We're looking over here at the 15-minute chart. Price is going back to the cloud. Our volume on this was 2,704. This volume is 3,310. So the green has more volume pushing it up. Okay, so here we got the perfect cloud tap. So we're going to see if price is going to reverse. Now, the thing is, when you look at the 15-minute chart, and the 15-minute chart has a red cloud and price is going up and tapping it, there's also this 15-minute trend line. This is an indicator over here. I didn't draw this. And so price could be tapping that as well. So over here on the 2-minute chart, we have a green candle.
It's green up there. Candle is also green on the Heikin-Ashi.
Good call. We'll stay in this, or stay out of this.
It looks like we're flopping around.
Okay, so this has gone to the 20 moving average over on the 2-minute. It's hitting the 50 moving average, but it's rejecting. We've got a wick here showing rejection. Now, if this candle continues green, we'll stay out. If it starts to turn red, we might consider an entry. We're getting a rejection off of this. Our 2-minute is showing a red candle. This wick shows it rejected going up any higher. Our 2-minute shows a red candle.
Go in.
Go in?
Yeah.
Order submitted.
Okay, so we're going to move our stop loss to above our white 50 MA for 415. We're going to keep our profit target at 2,000, but we're going to watch for when it hits here. You could have gotten in after price was below the 50 MA and this cloud was red and descending. And like I said earlier, you could take the 670 and stayed in until it hit this mark that we had here and gotten $1,000. Okay, but we're going to take this but that was a little riskier. The ratio on that was red green. We're now on a red, but the price is at the swing level and at the cloud level. And so we're just going to go ahead and take this and hold it. The cloud is going down. It was a rejection over here off of the cloud, the 9 MA, and it's going down on the 15-minute chart. We have a red Heikin-Ashi over here. This one is still green, but our 2-minute is red, our 5 minutes red, our 15 minutes red, and so we can feel more safe about that. Okay, now that we're in our trade, I'm going to go ahead and speed this up.
When you get a minute star, could you also move our stop loss down?
You want to move the stop loss down?
Yes.
Where do you want to put it?
Down to the blue.
There?
Yeah, probably right there is good. Yeah.
Okay, so that's $100 if it reverses. Yeah, the rest of this is just determining where to exit and where to move the stop loss, so feel free to tell me where.
You could move the stop loss down to the next blue.
How about let's go just above the previous candle?
Okay.
It's always good to go above the previous or the second previous candle, just so that you don't stop yourself out prematurely.
Target filled.
Okay, there we go. We hit our target. Let's see where it would have continued to if we had held it.
Still, that was an excellent team effort.
If we had gotten in here, which would have been about the same entry that we took later, skipping this, it went down to 2,775. So here's where we exited at 2,000. It went down to 2,775. 785. It's still going. Let's go ahead and speed up some more.
Because now it's heading back to the cloud.
Mm-hmm. So it would have gone back up. We would have lost. So we would have been back at 1,800, back down to 2,505. Back up, down, 2,225, back up, down, and so forth. So that was a good spot to get out at our 2,000, or if you wanted to hold it, it didn't ever reach 3,000 if you're wanting to hold to 3,000. And plus, it's always good to keep your trades short so that you can live your life. So this was like we started here at 2 o'clock, and it is now, well, no, it's not now 4:32. It's, say we ended on this candle, which is 2:55. So that would have been an hour in the trades. That would have been an hour at your chart at 2 a.m. to make $2,000. Now, if you had gotten in on this and exited, that could have been a $900 trade, then another $2,000 trade. So you would have had $2,900. Can you trade at 2 a.m. in the United States? Yes, that is the London Open. So if you work days or your time schedule 2 a.m. is good for you, you're up. We showed some previous trades that were at 5 p.m. Central Time, after people get home from work, evening trades. And so you can trade throughout the day in the evening. You don't have to trade during the day if you are at work and want to still get in some trading. Moey, do you have any questions?
Nope, I think I'm good.
Okay, thank you for joining me in this, and thank you. If you've learned anything new today, please like and subscribe and leave a comment and let me know if you have any questions or if there's anything you'd like for us to share with you. Thank you. Bye.